Hello traders everyone, welcome to our new webinar. Just let me know if we are live. Can you see the screen please? Are we good to go? If someone can let me know in our chat box here on YouTube. Okay, so welcome to our webinar here. I assume this will be last webinar for this year. Also, this one today will be a bit shorter. As you know, I'm still working on this special Elliott Wave 2026 analysis, where I try to connect all of the dots from different markets and cycles based on fundamentals as well. So before we continue, make sure to put yourself on our newsletter list. Okay, I believe, let me just find it here, so that you will be the first one to receive this special video. Okay, so I'm putting this on the YouTube here on chat box. So basically I will be covering a lot of different assets, the major ones of course, because I think that, and we all know that markets are correlated, so I want to keep my eyes clear going into the 2026. So if you want to be one of the first that will receive this update, make sure to sign up on that newsletter list. Also, before we resume with this webinar, as you know, Eightcap is sponsoring our content here on YouTube. So if you're looking for a new broker, you can claim 30% deposit bonus. Also, they have new challenges accounts as well. So you can check this also here on this link at wavetraders.com sponsorship. So what's going on? As you know, last week unemployment rate came higher. Then we have the inflation data has softened in the US, so everything looks like that more cuts are coming. So market is certainly positioned in this kind of direction, and looks like that we could have a Christmas rally on stocks. As you know, usually during this period of the year, we can see a push to the upside on stocks, or at least some stabilization or sideways price action if maybe market conditions will get very thin here. But overall, we just have to consider that before that market here, I'm looking at the S&P 500, we have seen here a pretty nice and deep retracement back in November, then very nice bounce, this pullback ahead of this Christmas holidays, and now looks like that we are setting up a stage for a very nice push to the upside here. So I just think that everything looks like we are headed for risk on flows. Of course, in 2026, if I zoom out, maybe look at some bigger charts here, I just think that we will have to respect the potential higher degree fourth wave correction. But for now, we are still not in that phase. I still see room for more upside for 7K here on the cash market, maybe even higher before market in a few, let's say March or so, we see some reversal on stocks. But for now, when we have this direction, at least for a fifth wave of wave 5 of an extended wave 3 here still ongoing, I think that obviously dollar could stay in this bearish mode. And looking at dollar index wave count here, notice that we finally came very closely to this gap from the beginning of October. As you know, we have been talking about this about this gap a lot. We highlighted it even when we were still on this rise around 100 level, and now you can see that market came very nicely back to the downside, close to this gap, and now we are seeing some rebound, some stabilization. It's total normal because of this position adjustment going into the end of the year, and because it's Monday, because market could be very slow this week. I'm not sure if we will get any strong push to the downside just yet from here. You certainly should realize that this choppy price action could resume, but what I would personally watch for, if we see some strong push to the upside on the dollar, maybe around this in the mid of the week or so, then in the next week, especially maybe then at the start of January, I would be expecting the dollar will once again try to resume this downtrend. So any kind of a bounce here, in my opinion, is just maybe some opportunity to join this trend, and maybe even look for some kind of a dollar shorts across different currency pairs, because market is already pricing, is of course pricing in more cuts, and that is something that could keep this dollar clearly in downtrend. But as I said, maybe because of this holiday season, just keep in mind that maybe it's not the best idea to chase the markets here going into the end of the year. You just want to be maybe have some calm last few days of the year, and then look for potential setups in January. Now looking at the euro dollar, as you know, I've been highlighting that possibly we are here in a fourth wave triangle. We know that the ECB is much more hawkish than Fed, who is dovish, and this is something that could define the first few months of the uptrend here on the euro dollar. So I'm still looking for 1.2 level, maybe even slightly higher, but then I would be expecting that this cycle will come to an end, okay, in 2026, and maybe that's when whole assets could turn around a little bit. I'm also expecting that stocks will make a pullback, and as I said, I have ready this video for 2026 where I will also cover stocks. I will also look at the dollar, and maybe it's not a bad idea to show you what I'm looking at the dollar. I also shared this on X as well, so here is this one. Okay, so that's probably the most unpopular opinion, if I can say it like that, right? So notice that I'm looking at dollar index positioning, and we can see that large speculators are heavily short, and look where we are. We are very, very close to these extremes from 2007, 2008, and we exactly know what happened back then. So in my opinion, this kind of a positioning just suggests that we are moving into some extremes here, and definitely it's something that we have to consider, especially when we also on top of that have some Elliott wave structure and other signals that could possibly hint that maybe the dollar will see one more push to the upside at the beginning of 2026, maybe first half of 2026, and then possibly we will try to stabilize somewhere between 90 and 95. Okay, so that's probably the most important chart when I go when we are going into 2026, because everyone just expects that there will be more cuts coming, that yields will come to the downside. Keep in mind that dollar has seen a pretty nice move lower so far, but that US yields, the 10-year, is still somehow very sideways there, right? So I just think that there could be some very interesting reversals in 2026, and that's something that we have to consider. But of course, that's more for a longer term perspective. For the short term perspective, it's still very clear that dollar index did not complete the downtrend yet, right? And if we try to link this with other markets, other pairs, of course, I'm also expecting that pound will continue higher. What's interesting about pound, that last week CPI has softened, Bank of England cut rates, but after initial drop, cable relatively quickly stabilized, and we talked about this 133 level as a very important support, and I think that now we could maybe consolidate for this week. I would not be chasing again this pair here, but if we would see, let's say at the beginning of the week, like a retracement back to this level from last Thursday when Bank of England cut rates. I think that this could basically be a very interesting support for potential rebound if we'll see this level tested. Also keep in mind that we are approaching some resistance up here, so again, not the best place maybe to look for some kind of a fresh longs, but after some a bit longer pause, especially if you consider how wave 2 this one was deep and also longer in time, I just think that this could be a bit not enough maybe for this wave 4 to say it's finished, right? So that's something to watch for. Also, it's Monday. We know that Mondays can be very tricky. You can see maybe sharp moves on Mondays, but usually Mondays will not define the direction for the whole week. Usually these Monday flows will be reversed. So if we see now sharp move into that resistance area because of holidays, of course I would watch out for another leg to the downside, for some stabilization, not necessarily a sharp drop, but maybe just more sideways to the right, and then we see another push higher there. By the way, guys, anyone who is here for the first time, make sure to subscribe to our channel and press a like so that we will be listed higher here on YouTube. Now, looking at dollar yen, this one is also interesting. BOG hike rates, but still market somehow is ignoring what they are doing, what they are saying. It looks like that this push to the upside that we are seeing right now could be more linked maybe to potential speculations that US yields could possibly that stocks could possibly stay in this recovery mode, and this, as you know, is putting some bearish downside pressure on Japanese yen. And as I said last time, I still think that there is a chance that we will see a retest of this 159 area or so, which dates back to January 10th. So who knows, maybe we'll see new highs for this year in some final days of now of 2025, because that was January 2025 highs. So that would be maybe the first in the resistance to watch going into a new year. Then very big level should be 160 and followed by 162. So for now, this trend, this recovery is not really finished yet. We'll see if BOG will try to turn this trend around. They certainly are not satisfied with the current situation here, and I'm sure that maybe some rhetoric could be the early or first trigger for potential reversal if we will start moving into this 160, 162 resistance area. Also looking at dollar CAD, as you know, we talked about this one as well 1 week, 2 weeks back. What's probably the most important and very clear here, that was an impulse down. Then we had a pretty nice recovery for the around 50% of the previous decline. Then we even broke this. Let me delete this to not confuse you. Then we also broke this channel pretty aggressively. So that's the most important indication what you can get for potential resumption of the previous downtrend, especially when you have such an strong extended lag. So in such case, of course, someone wants to join the downtrend here. We always prefer to watch the opportunities on retracements. And looking here at the sub waves here on the 4-hour time frame, that was a very nice extended wave 3 to the downside. We stabilized here at the previous support levels. So what would be ideally is that wave 4 will now unfold, took place in the next few days, maybe even 2 weeks, and then market will resume back to the downside when we return back to normal flows in January, right? So in the beginning of January, you can still see some, because of new position adjustments for the new year, you could still see some both-sided moves before maybe the market stabilize and find the real direction, let's say maybe in the 3rd week of January, and then that could set up the ideal conditions for potential next sell-off. So I think that the previous resistance here is a pretty important one. If we can speculate that maybe wave 3 has ended here, of course, then that level around 13870 matters. It also the level that comes in around this wave 4 that equals to wave 2. So you can sometimes, when you have an extended lag of wave 3, waves 4 and waves 2, which are the corrective lags, will be similar in distance. Not necessarily the case, but it can be the case. Also, based on this sharp wave 2, we have to consider a rule of alternation. So what that means? That means if wave 2 was sharp, wave 4 can also be a bit more slow, sideways, maybe like a triangle. If wave 2 is a bit sideways, maybe like a flat or something, then wave 4 can be a bit deep. Okay, so that's something that I always try to consider whenever trying to apply the best proper wave count to the current conditions here. So the bottom line is, it's a downtrend that is resuming, and I think that after a bounce we could experience more weakness. Commodity currencies, as you know, are usually doing pretty well when you have stocks in risk on mode. Also Kiwi, this one is making a pretty nice reversal as well. We talked about that a lot, even back here when we recognized this ending diagonal. We had a very nice strong push out of this ending diagonal, and we came back to this second wave resistance. Also, it was the low here that dates back to August 21st as well. So this whole area, as you can see here, it's a very important one, right? So it's not really surprised that we slow down a bit here, and now it looks like that we are pulling back for wave 2, and I think that it's just a matter of time when we will see a next push to the upside. I dare to say that that market will try to break in the first weeks maybe of 2026, that market could start breaking this trend line resistance connected from July 2025 highs. What's the most important here about this whole structure is that we overlap this previous wave A, right? So it means that even if someone would say that that was wave 4, it would completely invalidate the wave count. Okay, and that's something that you always, maybe if you love the Elliott waves, if you look at the markets from Elliott wave eyes, that you always try to find, if you are bullish, always try to find the level, the best bearish wave count possible. And if that bearish wave count is invalidated, that's when your bullish bias can be confirmed, and that's when you may start exploring the ideas in this kind of direction. But as a traders, of course, it's always important to just be aware of what if this will not work out, and that you are ready maybe for the opposite of what you or market in general expect. So you want to be ready or prepared to rather than surprise. So keeping different wave counts, of course, is very important, but I always somehow try to not to show you too much of the wave counts, because then I know that if someone is not understanding Elliott waves in details, it can also, on the other hand, cause a lot of confusion. So that's also something that I consider whenever presenting you the wave counts and ideas here. But I always try to come out with ideas that is the most probable. Now looking also at the Euro Swiss. So we talked about Euro Swiss and covered it a few times in the past. We said that this one is trading at the multi-year lows here. Of course, it's a downtrend, but maybe whenever we see this kind of extremes here, when you put together also what the ECB think it will happen next year, what market thinks it will happen, what Swiss National Bank is, or how they are looking at the current situation, then it makes you think that maybe Euro Swiss is ready to turn around, because Swiss National Bank, of course, is looking to take policy actions, maybe even negative rates, to limit the strength of Swiss franc. On the other hand, you had some ECB members who said that in 2026 they believe that the next move could be a hike. So that's something that could keep this Euro Swiss pretty interesting, especially when you have this then also on the top of that this bullish reversal. Okay, so that was a new multi-year low, and then we have seen a very nice 5 waves up. So that looks like a reversal, and now you have this 3-wave counter trend movement right into the previous 4th wave. So we are here in this, we can call it yellow box, the support box, where I think that market could stabilize, and would not be surprised if in a few weeks from now we will start trading higher back at these levels, while the market of course should then remain above this invalidation level. It's been November low. So that's the key, and that's what I really love about the Elliott waves in general, because it helps with the structures, guidelines, rules. It helps us to navigate the markets closely and exploring the idea with these useful invalidation levels and entries based on fib levels. Now, looking at crude oil, as you know, I have been wrong on crude oil. I was looking and expecting push to the upside of crude oil when we saw this first rebound back in October. So basically, what I see right now is that we can be still looking for some major support zone here. As you know, most of these moves that we have seen in the last few weeks was based on speculations that war between Russia and Ukraine will come to an end. They will reach agreement. However, that's even if that would come true, because the market already priced in, the market will reverse, or at least slow down. But it will reverse even more aggressively if agreement will not be reached, right? Because the market then went too far. So I still assume that crude oil could possibly be looking for a recovery. I pulled out the chart in our chat room, but I don't have it here. But I noticed that since like from 2013 till 2020 or so, always when crude oil has been declining and moving to the downside aggressively in the final 2 months of the year, then in January, February, we have seen a recovery of crude oil. So maybe something similar could happen again here, especially if we start recovering back above this channel resistance here around $60 or 59. I think that we will have a lot of data to allow us to confirm that the low is really in. Also, when I look at maybe the bigger picture here, you can see that I'm counting this as a 5 waves down, and now maybe we still could be in this wave B consolidation. Now you are just at the lower side of the range. That's one interpretation. The second interpretation is, what if this whole decline is also a leading diagonal for wave A? And also what this one suggests, even if you have 5 waves down, but because of the wedge shape, it suggests that we could see some support around maybe around $50 per barrel. Also, US oil reserves will most likely get filled if the price will keep pushing to the downside, because that's when they want to fill their reserves, when the price is cheaper, not expensive. So that's something also to consider. If we'll see sharp move to the downside, you can expect a rebound later on. So I think that, let's say, for at least first half of 2026, I would not be surprised if the crude oil will really show us some solid reversal here. Someone is asking, Gregor, can you look at emerging markets and commodities? Actually, I covered emerging markets and commodities in this 2026 video outlook. So video will be released this week. So keep an eye on our notifications and these emails or X posts, because you will be able to find what I think about commodities in general, or the markets and other markets there, right? Now, looking at gold, as you know, gold is pushing to the upside. It's finally breaking higher, trying to catch the other markets. You can see the crazy moves here by palladium and platinum. These two broke to the upside with a bit delay compared to silver, which was the leader, and now also gold is trying to do the same, but it's still lagging. However, I think that this trend obviously could resume, especially if we consider that dollar index, as I showed you earlier, still has a room for another leg lower there. So looking here at this wave structure, I know that the wave pattern is not maybe the best here, especially when you consider that that was maybe a free wave rise here, but someone came out with an idea, what if that was some kind of a triangle that finished here in a wave 4 and now you're progressing higher. Well, the idea is because silver is still not showing a completed 5 waves up here when looking at the red wave cycle, right? I just think that after a pullback, even gold itself will see more upside. But because gold is much weaker compared to other metals at this stage, I think that rather than call this as invalidation level at 4247, we should call it or watch it for potential very strong support, especially if we consider a wedge formation, which is very possible that overlaps will occur if gold is much weaker compared to silver at this situation. So if we get a retracement, I think that there could be more upside. The first support would be at previous consolidation range here around 4,300, and then, as I said, 4,250 could be the next level to watch. Looking at silver and why maybe we should be aware of some pullbacks here. If you look closely on these subdivisions, I can count 5 waves up. Even here you will be able to count 5 waves up within wave 3, and now you are then in a wave 5. We are at the 261.8% extension. Also, there is still room for more upside, maybe closer. Let me write this be more precise here. I put the channel on the top of wave 1. So here comes in a resistance around $70, slightly higher. So it's bullish until it's not. And if you see pullback on dips, the previous supports here of this fourth wave is around 64.76. That was also the swing high here from 10 days back or so. So that's for metals. Again, don't forget to press a like, please, here on this YouTube. Don't forget to subscribe to our channel. Now let's take a look on the final one, which will be final coverage for today, which will be Bitcoin. So someone asked if I can look at the Bitcoin bigger cycle, like I think he asked monthly, weekly. Anyway, I have here monthly wave count. So as I said already last time, markets will always move in cycles, and based on this red cycle here, you can clearly see that we recently maybe finished and completed this bull cycle. What is really concerning here, there are a few things. First thing is that we broke this channel support. The next thing is that you have stocks that are trading at very close to all-time highs, while you have Bitcoin cryptocurrencies still struggling. So if stocks would see some new pullback next year, even with some rebound on cryptocurrencies, on Bitcoin in particular, it doesn't necessarily mean that Bitcoin will reach new highs. So I think that there is a chance or risk that cryptocurrencies will consolidate, at least in the first half of 2026. But if we see some drop closer to 50,000, 60,000, I think that this could be, from a price perspective, not time perspective, this could be quite interesting and attractive support. But what I'm saying that's not necessarily interesting from a time perspective is because if we are really entering since October this new 12 month of consolidation, then we know that October 2026 is something to watch for, right? So we are still far away before this market could really maybe start observing and showing us some interesting opportunities. That's one thing. The next thing is that, let me just show you this chart. I also shared this one on X. Okay. Okay, so next thing is here we are looking at long-term holders, right? And you know, long-term holders are those that don't care about the price, how deep the market will go, because they will just try to stick with their longer term perspective. However, lower the price goes, even more fear is involved. And when there is a lot of fear involved, no matter what your maybe longer term goal or plan, at the end of the day, still this could be a very sentiment play, right? So even if the price, let's say, will move closer to 50,000 after that very strong push to the downside so far, there will be even more fear involved. What if it goes to 20,000? So that's when some new liquidations will occur, especially because there are some long-term holders that bought, let's say, for around 30,000. So at some point they will not allow their positions to go into the loss, right? So there could be even more liquidations, and if there will be more long-term holders that will liquidate their positions, this will take us into the stage where we will be closer to potential support. And if you will take a look here on long-term holders chart, you can basically see, I also talked this in 2026 outlook, you can see that in the past occasions, always when we moved here into these extremes below value of 1, that's when long-term holders are start selling at a loss, right? It's been the case several times here over the last few years, and so far, despite this very nice push lower, we are still not in that area, all right? So I mean, from that perspective, looks like that there still could be some room and time for price of Bitcoin to push these markets in some kind of a new liquidations mode before they can rebound. Of course, this won't be the case always, but when I try to connect the dots between this data and the wave structure and the lagging compared to the stock market and the COT data of the dollar positioning, well, this raises a concern that maybe we really could see some deeper correction, deeper prices first, maybe some another shock to the downside before we eventually stabilize, right? And when looking here at maybe this daily wave count as well, we are just keep chopping around here. Even with stocks is now trading around here, we are still down here. Even if it goes slightly higher here, and even if we start breaking above 100k, I think that 107, 108 will be again another very important resistance. At the same time, when possibly here the S&P 500 and Nasdaq as well could try to complete wave 5, right? So that's something that we should be aware of. Okay, traders, I hope that you enjoyed this presentation, this video. Don't forget to put yourself on our newsletter list, as I said. I will also put this link below this video here on YouTube and also on X, so you will be one of the first who will receive this video in a few days. Also, we will have special offers as always for the next year, so if someone will want to join our services community, you will have your chance to do this for with a discount. Traders, good luck this week. Keep in mind it's holiday season, so if I won't make any kind of a new webinar or post here on YouTube in the next few days, because I will be mostly offline, I will still be doing some updates, then of course I wish you all the best in 2026, and I hope to see you in our webinar each Monday next year. Traders, good luck and talk to you soon. Bye.